Well, welcome traders to the new trading week. We look ahead at the landmines and the event risks that you will need to navigate your portfolios through. We're looking at AI and mega cap tech in the US. Have we lost that leadership? We're seeing clear vulnerabilities emerge. And what does this mean for volatility ahead of options expiry? We've got our eyes firmly on China and the China data flow because it's really manifesting in a weaker yuan and also weaker Antipodean FX, such as Aussie and the Kiwi as well. So plenty to go through. We go through the interest rate side of things as well as the trade setups that you need to have on your radar. Take a look at the video. Yeah, morning trade. So plenty to focus on this week as we look through the event risks that we need to navigate our trading portfolios through and look at the various thematics that are sort of dictating the landscape at the moment. And one thing we are watching very closely is the US equity market and specifically the mega cap tech and AI names. You know, we seem to have lost a little bit of leadership there. There's been this really rich concentration in positioning, which everyone's been talking about, but there has been some vulnerabilities kicking up in names like NVIDIA, in Apple, and I name a few there as well. So we are continuing to watch the tape. The US 500 is sitting on that 50-day moving average. Yeah, will it break through those levels going forward? Now, of course, we've got the options expiry this week, so that will dictate some of the flows we've been seeing playing through, but that's something, one of the big thematics, as well as what's happening with the US dollar. We have seen the re-emergence of the US dollar. That seems to have found some really good flows of late, and specifically against the Japanese yen and some of the high beta Antipodean currencies as well. But certainly something we are watching, whether that US dollar can continue to get a wriggle on as well. Now, throughout the week, we are watching China data. China's been very much at the forefront of what we've been seeing. There's a lot of concerns around property developers and whether we're going to see a credit event playing through. We saw, CPI, we've seen trade data, which is obviously concerning. And also that new yuan loans last week coming out at 14-year low when the market wanted to see a little bit more. So what's going to happen with the data this week really could dictate, sentiment towards broad assets and also the US dollar as well. We're watching that high frequency data of the industrial production numbers, retail sales and fixed asset investment. And on Wednesday, that new home sales number as well. And obviously that property space going to continue to get an eye on. But we are watching those, the yields in China, whether 5-year yields can push a little bit lower, whether we can get 10-year government bond yields, say, moving down towards sort of 260. I think that would have big implications once again for dollar CNH, which has been, such a big Bible for me in terms of FX markets. We've seen dollar yen moving above 726. Technically it looks like it wants to go up to those June highs around 728.50. And as the yuan's been weakening, despite the PBoC pushing back and state banks selling US dollars in the market, we are seeing big weakness playing through in the Aussie dollar and also the Kiwi dollar as well. And I think that's big implications there. So, certainly we continue to watch that one. And that dollar CNH really a big focal point for me. Watching the UK, we saw a decent GDP number last week. Obviously, GDP is not something we look at very closely because it's so backward looking, but the pound has seemingly reacted to that. But this week we are going to be watching wages playing through. The market's expecting around about sort of 7.4%, and also the CPI print the following day, where the market's looking for the headline to drop down to 6.8% and core to about 6.8% as well. It's core being very sticky as well now. But if you look at rates pricing at the moment for the UK, we've got 540 being the implied interest rate for the 21st of September Bank of England meeting, which implies 21 basis points of hikes for that meeting. So will we see any of this data really just solidify or push it above 25 basis points? I think there's a bit of a ceiling on that. Probably some downside risk if we were to get a really big decline in CPI relative to expectations. Then you could probably move that implied down to about 15, 16 basis points or so, which would be very much a live meeting. But at the moment, the market is saying that on balance, we're going to get 21 basis points. So a hike very much in the price, with terminal, as you can see, being priced for about 574 for February. So giving us about 55 basis points of tightening being priced in. But the pound certainly looking very nicely supported against the Antipodeans and also against the Japanese yen. We're expecting a potential breakout playing through there as well. We're looking in the US. Now, what have we got? We've got retail sales expected to be up 0.4%. The control group element, which feeds directly into the GDP calculation, expected to be up 0.5%. So something we're watching quite closely. We've got a whole number of consumer stocks reporting throughout this week. Walmart, Target, to name a few. So that could be quite interesting from a sort of a micro perspective and seeing what they're saying about the economy from a macro perspective as well. We've got splitterings of housing data. We've got the FOMC minutes, but obviously everyone's focused on looking ahead for Jackson Hole as well. We've got our eyes on the 10-year Treasury. Can we break in above sort of 420? I think is the one we're looking at very closely. And also 5-year real rates You know, can we push nicely above 2% and 2.09%? And that would again propel the US dollar. Now, in terms of rates in the US, you can see we've got really little being priced for September. We've got 3 basis points being priced there. We can go into terminal, which is for November. We've only got a 33% chance of a rate hike there. So only 6 basis points being priced in. So rates really not getting a focus. It's really more about the back end of the curve and also real rates that we're focused on there. In Australia, we've got wage price index. Yeah, the market's not expecting any change there on a year-on-year basis. And also the employment number on Thursday expected to see 15,000 jobs and an employment rate of 3.6%. But again, if you're looking at the Aussie dollar move, you're not really seeing that. It's more about China proxy than anything else. Have a look at the rates market though. We've got 2 basis points being priced in for September, so not really a lot being priced in there at all. Market's saying they're going to be on a pause there. And you can go across the curve. We've got 17 basis points being priced out till March next year. So really the market's saying we're not really too sure, but we're probably going to see the RBA sitting on their hands for a period of time. In Europe, not seeing much data really that I think is going to drive too much. If you have a look at rates markets there, we've got 10 basis points being priced for September. I don't think any of the data, as you can see here, is going to move the dial too much on that one going forward. And we've got terminal being priced at 383. So elsewhere, we've got a rates decision in New Zealand playing through midweek. Yeah, they're going to sit on their hands. Nothing's being priced into rates markets. No economists are calling for that hike there. And again, the Kiwi dollar very much a function of what's happening in China. And we've got a Norwegian central bank in Norway. Yeah, they will raise by 25 basis points. Now, the Norwegian crown was the worst performer last week. Obviously, looking quite closely at the Brent market, something we're watching this week as well. So a number of factors to play through. We talked about the event risk. I'm really still very keen to see what happens in US equity markets and whether we lose this leadership playing through, which has been so influential for the market pricing, and also keeping a very firm eye on the Chinese markets and Chinese data this week. Let's see what happens here.